Hello traders, hello everyone, my name is Gregor and welcome to our new episode of Surfing the Elliott Waves, where I will look at some of the most interesting developments for this week. This video has been brought to you by Orbex. I will cover dollar index, gold and silver, dollar yen and euro pound. Now let's take a look firstly on dollar index. Now dollar index has come down very nicely from March highs, actually after stock market bottom in March. So we have seen a very nice and clean free wave moves since March. Okay, and what is probably the most important is that you had a triangle in the middle of decline, meaning that this is most likely wave B, and if that was wave B, then you know that current drop is wave C. Okay, so if that's the case, then a new bullish reversal can be in the cards. In fact, we have seen a very nice bounce so far out of this downward channel, meaning that this 5-wave drop can be finished for wave C, as also shown here on the 4-hour chart. What is probably the most important at this stage is that there was a quite nice bounce here from the lows, meaning that more upside can be coming at least in 3 waves in the near future. What is also very important to understand is that market could actually continue back towards these highs, but only if you see larger 5-wave recovery here back into this wave B area. Then I think that new highs are coming here for dollar index. Now let's take a look also on dollar yen. Now dollar yen came down very aggressively in the last 2 weeks from this 1010 level. So it appears that this correction that is underway from March highs still can be underway. Maybe as a triangle, maybe like a deep complex correction that will take us towards 105 before market really turns up. So it's really important to understand that this corrective sideways price action is becoming more complex. So it may be tricky to find the right timing about the potential completion of the pattern. So we will have to focus on the substructure. So either this drop will be in ABC wave X and another ABC structure, or will become a triangle. We will see how this will unfold, but I think that there will be needed much more time before this whole correction can come to an end and dollar yen really starts building the upside trend. Okay, so just be aware that we are sideways or even bearish on the intraday charts. Keep in mind also that looking at the 1-hour chart, there was a 5-wave drop here, okay, from that June highs, and you can now be in a stage of a free wave retracement, meaning that only temporary rise can occur towards 108, from where we should be aware of a new potential drop in prices. Now let's take a look also on one very interesting market, which is definitely gold. Now gold is definitely bullish, okay, and can be building a wedge here, meaning that this trend could come to an end. But what is really important is still the trend is up and that this wedge appears incomplete. It should be made by 5 subwaves. Now looking at the 4-hour chart here, what I'm looking at is probably a WXY correction for a wave 4 that can be finished, because we have seen a very nice rise after this reversal from 1670. What I have noticed is a 5-wave recovery out of this downward channel. So it makes me think that this market could actually continue higher based on this interpretation, where I would expect a free wave rise into wave 5, because as you know, each leg in a ending diagonal is made by 3 waves. Well, I have also another interpretation, which is actually a triangle. It's an ABCDE pattern, so it's a different wave count, but actually very similar expectations. After this completion, as long this market is trading above these April lows, I'm expecting price to reach a new high here above May levels. So looking at the intraday chart, I think that we have also here very nice wave structure, very clean 5 waves up followed by 3 wave setback. So I think if 1733 is broken, watch out for more gains based on this primary interpretation linked to the current 1 hour outlook that I just showed you. Now looking at the silver, even there we have a very nice pattern, I believe, here on a daily, or actually even better on let me just find it here on the 4-hour chart. Okay, I see very nice, very strong uptrend. Probably first leg was extended, then you have seen a wave 2, very small one, which is normal when you have first leg extended, and then you had a very clean 5 waves up for a wave 3, and now very nice 3 wave setback. Notice that this 3 wave setback took us back into the area of a 4th wave, back towards the 38.2%. And also looking at the intraday chart, you have this wave C equal to wave A level, right at this very nice zone where also we have mentioned a 38.2%. So what we see so far is also very clean 5 waves drop for wave C, followed by this reversal out of this downward channel. So this broken channel actually indicates that maybe we have a low in place and that we could see much more upside. Our significant rise above $17.73 could really indicate that we are in a wave 3 position, meaning that more upside could be coming back towards this level. Now let's take a look also on Euro Pound. Now Euro Pound is bearish on the big picture because we have seen a 5 wave drop here from this March highs. So I'm thinking about more weakness, but after a completion of a 3 wave rise that is still underway. 3 wave rise labeled as an ABC structure. Wave A was finished with its own 5 subwaves, followed by 3 wave setback for a wave B, and now looks like that we could be in a stage for higher prices into wave C. Looking at the intraday chart here on the hourly, I think that there is a very clear pattern. You have wave A, you have wave B, and you have this wave C. And what is the most important, that from that recent low, market rallied with 5 waves, followed by a 3 wave setback. 3 wave setback found a support at this trend line connected from the top and wave B high. So firstly, it was very nice indication for a trending change when market was made a breakout. A new indication for bullish trend was when market after this breakout made these 5 waves up, and then despite a very strong and deep decline, this trend line then reacted as a resistance, and so far caused a very nice reversal here back to this wave B level. So technically speaking, I would not be surprised to see more upside here. Definitely looking for this wave A high to be taken out, and still you definitely have to consider some alternate counts, which would be probably a triangle here if we just stay consolidating for a few more days. Okay, but eventually I think that sooner or later this high will be taken out while the market is trading here above 88.63 invalidation level. Traders, thank you very much for your attention. I hope that you enjoyed this video. Please leave a commentary below for any questions. Press a like or share this video with your friends and support our work so that we can do more of those videos in the future. Thank you for your patience. Thank you for your time. See you next week. Bye.